So this week I received a question from Kudzai, and it was actually quite an interesting one. His question was, should something happen to a company like Easy Equities, are investors protected? Now, this is a really good question, and I need to separate it actually into two parts. The one part is Easy Equities as a traditional stockbroker and how stockbrokers are regulated by the Johannesburg Stock Exchange. And the other is Easy Equities as a company that sells fractional ownership in shares, because those are actually two different things. So let's start with the beginning of buying a share. So if you want to go and you have this is with any stockbroking firm. Easy Equities is a stockbroker. They have a stockbroking license. I want to go and buy shares. I can open up an account with Easy Equities. I can open up with any number of stockbrokers in South Africa. When I do that, and when I go and buy shares or an exchange traded fund or anything with a stockbroker, because they're regulated by the JSE, there's certain rules they need to follow. And the first thing is that any cash or shares that you hold with the stockbroker is held in a nominee account. And this nominee account is separate from the stockbroker's business. So that means that these assets do not form part of the stockbroker's business should it become insolvent. They're absolutely, completely and utterly ring-fenced. So your shares are registered, as I said, with the nominee account, and you are noted as the beneficiary. And then this is held with the Central Securities Depository Platform, which is called Straight. So at any time, you can go and look on the Straight register and you will see your name and the amount of shares that you own or what companies you have shares in. Okay, so this information is held separately from the stockbroker. It cannot be formed part of the stockbroker's business. But this is not the same with fractional ownership. Okay. In this case, you've bought a fraction of a share, so you don't actually own the security or the share. What you have been issued is a guarantee in your favor. So in this case, First World Trader, this is the company that actually operates Easy Equities, they are promising to meet their obligations. But if they go insolvent, that guarantee is affected. So you would then have to claim the amount owed to you from the company under the agreement that you have with him, the guarantee. So it is important actually to understand the difference between buying an entire share and being an owner of a share in an exchange traded fund or any listed security versus having a fractional ownership in one, because there is a different risk that you're taking. And I think that was an excellent question and a good point to highlight. So thank you very much. And as I said, if anybody wants me to answer their questions, you just need to get hold of me at the link below or post your questions even on this YouTube channel. And I look forward to imparting some knowledge that way.